What's up, millennials? In exchange for about 10 minutes of your time today, we are going to take a look at the valuation of a company called AvePoint. And AvePoint is a data management company that is going to be acquired by the SPAC that is trading under the ticker symbol APXT. Before we start, keep in mind that I have not done extensive research about this company. I'm just going to look at the valuation according to the company and the SPAC themselves. Secondly, don't trust me, verify me. I'm just documenting my journey here. I am not a financial advisor. And third, don't forget, there's always a free Discord channel for you to join. If you go to nesami.com/discord, leave your name, leave your email address, you're going to get access to it. Before we hop into the valuation, let's take a very brief look at what the company is exactly. So according to the investor presentation, they are like a beautiful bridge. What kind of bridge? Well, they are a bridge between Microsoft Cloud and also what businesses actually need. Because they say, well, the thing is, businesses rather, simply don't really know enough about all of these solutions from Microsoft Cloud, right? Here you can see a few of them. They say, well, if you use our company, we can actually provide you with better data protection than if you would not use our company. We can also make sure that you have better compliance management. And there is no merger date just yet. We do know that they are very likely to merge in Q1, but there's just no merger vote date just yet. Then with regards to the pro forma valuation, we can see that they are going to use a base share price of $10 per share, which is very common with SPACs. And we can also see that they're going to be 199 million shares outstanding after the merger, right? So that means we can already do a few things. We can take that share price, multiply it by the amount of outstanding shares, and that is going to give us a so-called pro forma market cap. So if we do that, we arrive at a pro forma market cap, or equity value as they call it in this investor presentation, of almost $2 billion. Then we can also see that they are going to have $252 million in cash on their balance sheet. So that means that we now have the market value of, well, the market cap of almost $2 billion. If we subtract that amount of net cash of $0.25 billion, we arrive at an enterprise value of a little bit more than $1.7 billion. So basically what that means is that AvePoint right now, based on a price of $10 per share, is worth about $1.7 billion, right? But if we go into TradingView and we take a look at APXT, we can see that they are currently trading at a price of $16.08. So that's the price we're going to enter right here. And that means that the current pro forma market cap has gone up as well, right? Pro forma market cap right now is $3.2 billion, and the pro forma enterprise value right now, as we can see in my Excel sheet over here, is a little bit more than $2.9 billion. So right now, based on a share price of $16.08, AvePoint, the company itself, is worth $2.9 billion. Then with regards to the enterprise valuation, we are going to look at what kind of EV to sales ratio this company has. So EV to sales means the enterprise value to sales ratio. And we're going to compare that ratio with other companies out there. We're going to need two things for this, two numbers. First of all, we need a revenue of a certain year. Today, we're just going to take a look at 2021. And then we're going to need to apply a certain revenue multiple. For that revenue multiple, we're going to take a look at similar companies out there to see what kind of multiple they are currently trading at, right? Okay, so with regards to that revenue number of 2021, well, we can see right over here in the investor presentation, they expect, and expect of course is an important word there, they expect to have $193 million in revenue in 2021. So that's already a number we can put in our Excel sheet, or in our calculator rather. All right, so then with regards to the revenue multiple, I just said in the beginning, or just a minute ago, that we are going to take a look at similar companies out there, right? So we can see a few companies here, Alteryx, Dynatrace, and I'm not even sure how to pronounce this, but let's call it JamF. Sounds pretty cool to me. These are growth infrastructure companies. And then we have four companies on the right hand here, which is Avalara, Five9, RingCentral, and HubSpot. And these four companies are growth SaaS companies, software as a service companies, right? And we can see the multiples they are trading at right now. They, right now in this investor presentation, have put together for us the enterprise value to revenue, so enterprise value to sales ratios for all of these companies. For AvePoint, we can see that in 2021, they are going to have an EV to sales ratio of 9x. For 2022, that's 6.8x. Now for this video, we're just going to take a look at the numbers of 2021. We're not going to take a look at the numbers of 2022, okay? So we're just going to take a look at what kind of revenue or what kind of EV to sales ratios the other 7 companies actually have currently. So for the 2021 numbers, we simply need to look at these left-hand side bars. So for Alteryx, it's 14.3, for Dynatrace, 13.8, etc., etc., etc. Actually put them in my Excel sheet over here on the right hand side. Let's actually make that a little bit bigger. So I've put them over here. These are the 7 companies. These are the EV to sales ratios for 2021. And if we put them in a list from low to high, we can see that the median number, so the number in the middle, is the EV to sales ratio of HubSpot, which in this case for 2021 is 16.8, right? Okay, so they have an EV to sales ratio of 16.8. Okay, now here comes a slightly subjective thing from my end here. So we have this median EV to sales ratio of 16.8. I believe it could be fair to say, okay, let's make a range for ourselves of a low multiple and a high multiple, right? So we've got the 16.8. Let's say we're going to go for a low multiple of 15x. And a high multiple of 19x, right? Does that sound fair? I hope it does. You can't answer anyways. So we're going to use those 2 numbers to arrive at an enterprise value. Let's go to the correct spot. So we already had that revenue number of $193 million in 2021. We're going to multiply that first of all by the low valuation, the low multiple of 15x, as I have just decided, or as we collaboratively or collectively just decided, right? So 15 times 193 is $2.9 billion, which is the number that I put over here in my Excel sheet for the low valuation, okay? And if we do exactly the same thing for the high valuation, we just decided that for the high valuation, we're going to take a look at a multiple of 19x, right? So if we do that, 193 times 19 gives us a valuation of almost $3.7 billion. And then we can also decide what kind of midpoint valuation that is going to be. So midpoint valuation is basically the average between the low valuation and the high valuation, right? So the average between these 2 numbers is about $3.3 billion. Okay, so that is the fair enterprise valuation, right? But we need a few more things. We right now have these enterprise valuations, but we want to go to a fair price per share, right? Well, first of all, if you remember, we said that the market cap and the enterprise valuation, the difference between that is the amount of net cash, right? We said in the beginning that if you take the market cap and you take off the amount of net cash, you're going to arrive at an enterprise value. We're now going to do the exact same thing, but the other way around. So we're going to take these enterprise valuations, we're going to add the amount of net cash to arrive at a fair market cap, if you will. So for the low end, you would have 3.1 billion, midpoint 3.5 billion, and high market cap would be 3.9 billion. Now you can say, okay, so you have these fair market caps. We also saw in the beginning of this video that there are going to be 199 million shares outstanding after the merger, right? So we can now say, okay, we have these market caps, we have this amount of outstanding shares after the merger, so we can take these market caps, divide them by the amount of outstanding shares, and then you're going to arrive at a fair price per share. So if you do that, you're going to see that for the low valuation, you're going to arrive at a price of $15.81. For the midpoint valuation, a price of $17.75. And for the high valuation, $19.69. So AvePoint right now would have a fair midpoint price per share of $17.75. And that would mean that currently the price of APXT, the SPAC, is actually slightly undervalued. Keep in mind though that I'm just not an expert, I'm just not a financial advisor, right? So don't pull all of your money out and put it all in this stock. Always keep in mind, always do your own due diligence with regards to this company. And also take into account, we have been taking a look at assumptions. We've taken a look at an expected revenue of 2021. We're not sure if that is even going to happen. And we also decided to put together a range of revenue multiples that I decided. So if you want to use another multiple, that can be possible, but then take into account that the entire calculation is going to change and your fair price per share is going to change as well. Now, in exchange for this video, I would like to ask you you for some feedback. I would like to ask you to put in the comments what you liked most about this video and what you liked least about this video, because I'm always trying to improve. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.